Warren Wheatley is breaking into his holiday to bring us up to date on, I think, something that a lot of SME owners in South Africa have been waiting for, Warren, the Kisby Fund. It goes back some months now when you first launched it, just after the beginning of the COVID pandemic. And the idea was to find investable businesses, SMEs, that are really good businesses, but actually might have hit some kind of a cash flow issue. I see you've got your first funding in.
Yes, that's correct. We've got two tranches of funding, one impact capital from a Mercantile Bank and a second tranche from quite a large retirement fund who've given us 200 million to deploy as a debt instrument. And so we're ready to rock and roll. And in fact, we've opened the platform and we've opened it specifically to what I call the first responders, to the guys who eagerly filled out their registration details. And so they would all have, in the last week, received an email from me asking them to also break into their holidays by doing a little bit of administration and compliance so that when we all get back in Jan, we can hit the road running and we can get a few loans out and help guys kick off 2022 with a bang.
How many respondents were there? I recall from the business community there was an enormous amount of interest.
It's actually been quite exceptional. There have been over 350 applicants that pre-qualify, and many others that don't meet our lending criteria. So 350 that we've started with, and we'll 250 million doesn't spread that nicely amongst that many people. So we're looking to do around between 10 and 20 loans in the first 6 months of 2022. And we're hoping that the experience and once we demonstrate the capacity and the system's ability, that we are able to attract more capital into the platform.
Sounds like there's going to be a lot of disappointed business owners.
Well, we have raised we've built three platforms that can actually assess people. So we're gonna process every single application and have an interaction with every single application. And to the extent other platforms are more appropriate, perhaps quasi equity in, for example, the Altvest platform, or perhaps they able to access private debt. Through the Cape Town Stock Exchange. We are going to be directing them and helping the guys raise capital in some form. We've got a very specific mandate within Kisby, and that is to save and create jobs. And so we are naturally skewed to existing businesses, people that employ, let's say, five and above people, and who are at risk of having to retrench those people. And people who are strongly favored are those who have expansion plans that have a very strong focus on job creation. So we skewed, but with a very specific purpose in mind, and that's to, in our own way, attempt to address the unemployment issue, which I think ranks in the top five of problems South Africa has.
So if you take the overall picture of those 350 companies who have got through the pre-qualifying phase, the Kisby loan, which you've explained now, is going to be quite targeted, but there are two other options as well. I'm going to touch on those in a moment, but getting back to Kisby, what is the minimum turnover, minimum number of employees, and the maximum? Because given that you're not looking to help big corporates.
Um, so the maximums are generally going to be dealt with through our own portfolio construction. And that's really to mechanisms at our disposal to protect the portfolio. We've tried to stay away from minimums and maximums as far as we can. So the qualifying criteria, if I can just run through them, is you need to be SARS compliant. So we want law abiding citizens. You need to have 2 years audited financials. Um, we don't specify which two, so, but that again, is indicative of a socially responsible legislative regulatory compliant business, and with 2 years financial statements we can rely on. We are looking to do loans with a minimum ticket of about 10 million, but that's really just an internal guideline. If you need less or more, we're happy to consider those. Um, we need you to have more than 2 to 3 employees. Again, what we've done is we haven't baked in any real rules into the product. What we are looking for is job creation or job preservation, and being able to make a reliable credit decision. If those two items can be met, you're more than likely to get a loan from us.
The interest is interesting. A bit of a pun there, but it's not a set interest rate. It's a percentage of revenues. And explain why you went that route.
Well, in the first instance, we want to make sure that the loan is always affordable. And we link that affordability to your performance as a business. And we really are taking what you could look at as an equity stake in the business. So the loan is structured over 8 years. In the first few years, which we assume you would be struggling, and that's why we want to help you, the interest rate is incredibly low. If you work it out, it's almost below 8% as a nominal rate. And as your business improves, we hope partially as a result of improvements in the economy, but also as a result of having access to low cost finance, we enjoy, to some degree, some of the growth that you experience. You then need to almost pay it forward and refinance that loan, and we start having those discussions in halfway through year 3. By year 4 you need a repayment plan, and by the end of that year you need to have repaid the loan. Alternatively, at that point we could perhaps have discussions about converting that loan into equity. Our preference, of course, is to have the loan repaid so we can use the capital to pay somebody back. We then remain as, let's call it, equity partners for a further 4 years. At this point, the interest seems a little expensive because you've repaid the capital. But what we hope people understand is that the benefit of a low cost loan when you need it the most, you know, this is you paying us back for taking that leap of faith when no one else would talk to you. And so we continue to share in the equity over that period. So over the period of the loan, the entire period doesn't have cheap interest. We admit that, but we do structure it so that it's loaded appropriately. It's cheap when you need it to be cheap, and more expensive when you can afford to take on a higher cost. At no point is it ever more than, let's call it, 16% per annum. So when you do the math over an 8-year period, the maximum annual cost over that period would at no point exceed 16%. And that's still dramatically cheaper than what is being offered to people in the market, where you see rates as high as 40% per annum.
So I think I get it, Warren. Let me just understand this, but unpack it a little bit more. The According to your website, so you charge 2% of revenue. So if and you would extend a loan which is up to 30% of revenue. So just take me through a business that's doing 10 or 20 million rand in turnover. How would it work for them?
Let's keep the math simple. So let's do 100 million. You get a loan of up to 30 million, and you would pay 2% of that revenue per annum. So 2% of 100. Sorry, 2% of 30. So that would be 15. Sorry, is my math correct? 2% of the 30 million over the per annum. You'd pay it quarterly, and we'd use your management accounts to verify and take top ups each month. At the end of year 4, So the interest doesn't. So some interesting aspects. The interest doesn't compound, which means that at the end of year four, you would need to have paid back 30 million. So there's no compounding, and thereafter you continue paying 2% of your revenue for the next 4 years, and so if you've luckily grown your revenue to 1 billion per annum, you would be paying 2% of 1 billion.
All right. So you start off paying a percentage of your revenue. The idea is that you get a big enough chunk loan to expand your business, to reach your dreams, to save the jobs. And then you continue after you've repaid the loan for 4 more years, but you don't have an equity partner for life, which in a way is, I guess, it is expensive, but it's not as expensive as equity.
We've worked it out, that it literally is the cheapest type of financing available to SMEs currently in the market, where long-term loans are required. You could get a cheaper rate for maybe a 12-month loan, or if you, and bear in mind that these are typically unsecured. And when I say unsecured, I mean without tangible um, assets. So we aren't going to ask for grandma's farm um, in the normal course of events, or the family jewels. We would typically secure it with implements and equipment from the business. And if the business is really looking dodgy, we may look to the directors or principal shareholders for personal guarantees. But typically no mortgages, no, cession and pledges of your unit trusts with Alan Gray or Brentest or whoever else you invest with. So typically we try and ring fence it to what the business can afford and to secure. And we extend outside of that to personal guarantees from the directors, the executive management of the business.
So So now let's just go back to the practicality of it. Is that it starts at well, if you were one of the pre-qualifiers, one of those 350 businesses, you would now go ahead and start filling in all the forms, so that when you get back to work in mid-January, the loans could then be processed. When will when will those businesses actually get the money?
So we're hoping that we can start payments by the 1st of March, which sounds like a really long time, but our investment committee will really only return to their desks around the 10th of Jan. And at that point, we really want to start interacting with the SMEs. Given that this is our first batch, we want to understand what's in the pipeline, so that we can help as many people as possible. I know I mentioned between 10 and 20 loans, but if that ends up being 50 loans, then so be it. But we need to understand exactly what's there, what the portfolio is looking like. And if we can give 20 people 3 million rand, or whatever the case is, or 200 people 1 million rand, whatever the case is, we want to do that. So we want to take some time to understand who's applied, what they've applied for, and how best to help them. And that's going to require some analysis and moving outside of the system, which will pre-disqualify you if it doesn't meet the criteria. But what we want to do is unpack even the no answers to see if there is some way we can help. Um,
It sounds to me like it would be extremely appealing to a company that has high profit margins. So the higher your profit margins, if you're only paying off 2% of revenue, then this would be kind of a no-brainer. But high profit margins are not usually associated with high employment.
um, yes, that's correct. But there are businesses. What we think is the kind of businesses we're looking for are those, like I said, that are in high employment. But and we have seen, for example, ones where it's still affordable, provided you are making between at least a 15% profit margin, we think there is scope for you to afford this loan, particularly considering the alternative. If your business can't survive with a loan at 8%, you should either not be in business, or not have any debt on your books. So, every which way we've looked at it, the loan relative to other forms of equity remains cheap. There aren't any circumstances where anyone can accuse us of being a Shylock and extorting profits that aren't available from entrepreneurs. So, whether they're high margin or not, if you do need debt, this is the cheapest way you can access it.
Uh, Before we move on to the other alternatives, Mercantile Bank, that is now part of Capitec. I know you guys are very close to that organization through shareholdings, etc. Did you have to twist their arms, or did they come willingly?
They're very interested in what this could mean for them as a business. It's the loan is from them, so I say that because while it's not a space they're actively involved in, it is an area they are looking at expanding into. So it's not as if this is a mercantile bank product. It's from their book, and it was assessed based on a normal credit assessment. The loan is, I should have applied for a loan at Kisby. It's not as cheap as our loans, but I needed to get started. And, hopefully they like the product, that they actually, do make it a part of their day-to-day activities. But it had, I wouldn't say nothing to do with the relationship, but it's a commercial arrangement between Kisby and the bank on favorable terms to their shareholders and their depositors. Um, it just meant I knew the CEO's number if I didn't like something, But outside of that, there was no other reliance on the relationship to the disadvantage of any shareholders or depositors.
And those other relationships with Altvest and the Cape Town Stock Exchange, how are you going to be able to leverage those now that you've got 350 people or 350 businesses already, many more who've applied, and many more who, now that you're open for business at Kisby, are going to want to apply? How can you assist them?
So outside of let's call it angel or venture capital investing, we build in the group platforms that can assist businesses in every stage of their capital, um, or balance sheet restructuring or balance sheet accumulation, whatever you want to call it. So in the first instance, we've got Kisby that allows cheap debt. Um, you can then graduate to what I call quasi equity through Altvest. And that's going to be a mechanism that, in the first instance, for our star performers, as you know, we've been on the show with about Altvest. If a business is able to refinance their loan at year 4, we're going to want to have a serious discussion about making this business available to retail investors, because they've now proven themselves. We've got a great track record. We would have known management, so we have an intimate knowledge of this business, and it's perfect. It's perfect in for some type of public consumption. Um, and we hope that people graduate through our platform from having debt with us, then quasi equity with Altvest. And finally, once you are ready for, let's call it a big boy listing for either debt or equity, then graduate onto the Cape Town Stock Exchange. So that's the idea: is we start you off with debt, we nurture, mentor, watch you grow, and just graduate you through the different platforms. In all instances, making the capital that we deployed re-available for someone else who you've left behind. So that's really the idea: is you start with debt and graduate all the way through. And we're hoping that every single one of those 350 applicants find themselves submitting a listing application within the next 10 years. And that's the dream.
It's an exciting prospect for a ambitious entrepreneur. Is that particularly who you're looking at, and are there any particular sectors in South Africa that are jumping out as appealing to you?
Well, there are some sectors that have been particularly hard hit. Guys in the tourism and recreation industry, our construction guys, if they could get their margins together, they high employers. Um, but then also uh, tech and fintech and all the development of guys who are actually growing so phenomenally that we want to be able to help them in a way that doesn't keep them up at night when they should be getting their REM sleep. So, the whole Cape Town, Silicon Valley type stuff is very interesting, very exciting, and is offering businesses. What we like about them is that while they aren't high employers, they are high. They draw very highly talented people. But the business is very scalable into the rest of Africa, and the businesses are scalable into the rest of Africa and worldwide. So they don't just solve South African problems. There is scope, and with the growth in that scope, it means building call centers, building help desks, and all those things, and the ancillary benefits of those being successful do create jobs, not perhaps in the core team, but in the businesses that develop around them, the logistics, the call centers, the administration, all those sorts of things. And of course, then the accountants, the tax consultants, the designers, and the knock on effect.
So you're off to the races with Kisby. There's 250 million rand now in loans that you're looking at. What's your ambition at Kisby? How big a fund would you like to see this becoming?
We're hoping that we can get to 5 billion, because at 5 billion the fund is and the asset manager managing the fund are making decent money. I can then afford to employ the best, most forward-thinking analysts and technicians who can help. So I'd be happy with a 5 billion fund. But because we've built it, from the bottom up, fintech enabled, there's actually no capacity constraints, other than the size of our imagination. So it could quite easily be a 30 or 20 billion rand fund if South Africa institutional investors like the product and get behind it.
And that's the next step, no doubt. Now that you've got Kisby up and running, you'll be doing your first loans from early in the new year. It would then be something practical that asset managers can perhaps feel and see.
Yes, and I'm going to have data which can prove the test case. I'll be more than just a PowerPoint presentation. I'll have had some successes, hopefully very few losses, but we'll have a test case where people can delve into the data, look at what the experience has been, but more importantly, meet the entrepreneurs and see what wonderful people they've all, turned away, and see the difference that the capital is actually making. And
Have
hopefully
you had
that will open the floodgates.
Have you had asset managers asking for this first? In other words, I know you've spoken to a lot of people, but saying, "Bring us something that's actually working, and we'll then support you."
Yes, and it's quite understandable. They themselves are managing other people's money, and do need to actually walk around the vehicle and kick the tires and take it for a test drive and all those sorts of things. This isn't the US where the third biggest car manufacturer hasn't had a car leave the production line. We actually quite astute in our due diligences, and so I understand. And having grown up in the pension fund industry, I understand the boxes that need to be ticked before you taken seriously. I have used a few cheat codes to open the door. You label it impact or ESG investing, and people are start talking to you before the it all unfolds practically. And there are some funds who can see the vision without needing a 2 terabyte data room. And so we have had some support by some of the funds who are, you know, can see the future and who understand what we're doing. But for the most part, the guys do need a bit more assurance that, um, on the other hand, we do have a very high incident rates of fraudsters and scamsters in the country where people do need to take care of, the due diligence and make sure that the funds are deployed appropriately.